Hello and welcome to the October market update. My name is Dennis Maynard. I am a real estate broker here in Los Angeles, California. This week we saw unimpressive job growth numbers, which did compress the unemployment rate, largely due to people leaving the workforce. The increased controls and regulations being mandated for government workers and Democrat-run cities and states is leading to the loss of the labor force. In LA, the City Council passed the most strenuous vaccine passport restrictions in the country, while similar measures that are happening in New York are being challenged. The restrictions are being put in place right before the holiday shopping and dining season, which will likely have an effect on these industries, which are already struggling to survive. Compounded with supply constraints and log jams created by logistical bottlenecks have further strained those sectors. We are seeing mild softening in the home sales, but this still is very much a seller's market with low supply and high demand. The continued follies in Congress continue to wage even higher inflation due to reckless spending and terrible policy decisions. Be prepared for a winter of excessively high heating costs. Food and energy prices continue to apply pressure to family checkbooks as we look to the holiday shopping season as the government-induced inflation takes hold. Now, as you can tell, this is an aggressive deep dive into the local and national real estate market and the factors that go into it. I have placed links below to make it easier to jump around in the description. Please like or subscribe and follow for more fun and informative content. If you have not seen the TNT episodes on inflation, I highly recommend them as a primer to what's happening right now. But let's jump right in. There are 5 reasons the housing market is anything but normal right now. The first is mortgage rates. In this chart, we can see the historical difference over time of mortgage rates, which we are holding at substantial lows. You can see we're currently around 3%. Second is home price appreciation. As we can see, the appreciation has been some of the best we've seen in recent years. 3, months supply of inventory. Now, this actually refers to the numbers of months it would take to sell the current supply of inventory. Current national numbers are at 2.6 months supply. 4, days it takes to sell a home. The average days on market nationally is at 17 days to currently sell a home, some of the lowest numbers we have ever seen. 5, the number of offers per listing. A properly priced listing in this market will receive multiple offers. Nationally, that is around 4.5 offers. Economy. Currently, the gross domestic product, or the GDP, has recovered from the pandemic lows. However, this is largely due to a function of money supply and the printing of money. Please check out the TNT video on inflation for a better understanding of this. The 10-year Treasury appears to be ready to resume its downward pricing trend. As price and yield are inverse, we are likely to see higher rates in the future. This chart is of the U.S. 10-year note bond yield since the 1920s. We are currently at historically low yields. This is likely going to reverse. Unemployment. Why do we discuss jobs and employment in a real estate market update? Well, housing and commercial real estate are driven by jobs, job outlook, and growth. These factors support the fundamentals of the real estate market. The important thing to remember is about the unemployment rate is that it is based on an actual survey. The national unemployment rate is currently at 4.8%. One would think that that's amazing until you dig into the numbers. People are leaving the labor force, as is evident in this chart. The compressed labor force is creating downward pressure on unemployment rate, which may demonstrate that there is more to the story. The following maps demonstrate the unemployment across the U.S. for the past 5 years. The first map is from November 2016. The second map is from November 2019, which was the lowest unemployment on record with the largest labor force, and August 2021. Note, which states have been marked in deep blue have the highest unemployment rate? Just saying. Los Angeles unemployment rate is currently at 8.8%. When we look at the unemployment rate versus the labor force, we can see LA has had a 1.29% decrease in its labor force. This implies that the unemployment rate may be higher than reported. If we measure the unemployment rate against the February 2020 peak labor, we can see that it is easy to speculate that a higher unemployment rate may be true. Interest rates. The single biggest risk to housing, rising mortgage rates, is a real possibility in the next year that could bring prices down. Further, other economic, financial, and confidence challenges could also result in a drop or a flattening of home prices, even with solid buyers in place. But a drop or a flattening in home prices is a far cry from the crash we saw during the Great Recession. Zali Wolf from Zonda. In this chart, we can see that interest rates have been climbing from the previous lows to above 3%. Many factors led to this increase, including the Federal Reserve communicating that it will taper its support of the capital markets, and the broadening inflation and emerging energy supply shortages, which are compounding other labor and materials shortages. This is Sam Cater, chief economist at Freddie Mac. Now, mortgage rates projections are now averaging above 3.5%. This is by the third quarter of 2022. We don't know for sure where they're going, but we can speculate they are going higher, as it would demonstrate on this chart. This will affect buyers' purchasing power, which is demonstrated on this chart. There is a cost to waiting to purchase. With housing supply being short, there's not likely going to be an equal price reductions in the low inventory areas. Appreciation. In order to understand appreciation, home values, we need to look at supply and demand. This chart maps out the seller traffic across the United States. This is essentially the number of homes that's being listed for sale. The next chart is the buyer traffic, mapping out the number of active buyers in those markets. You should see a stark difference between the two. This emphasizes the price appreciation that is being seen across the country. Now, the appreciation that we have seen is also being driven to supply and demand. Current Q2 price appreciation nationally is about 17.2%. Foreclosure and forbearance. This chart demonstrates the number of distressed property sales. We are not currently seeing any increase. As I've mentioned in the past, homeowners have more equity in their homes than ever before with really low loan values. Sales. These are the current LA County sales numbers. If you would like me to take a look at your area or your property, please reach out. I'm happy to do that for you. All right, LA County, here we go. Single family active listings currently at 8,110. That is a 22% decline year over year. You can see on the chart that there were extreme lows. The single family pending sales are 3,321. That is a 28.5% increase year over year. Now that's kind of a really slippery slope. We'll see where it goes. It's definitely not the extreme lows that we saw in 2020 by far just yet. The single family closed sales is at 4,665. That is a 2.8% increase year over year. So sales are still relatively strong while the number of pending sales has slipped some. Home prices. Currently, single family median sales price is around $888,000. That is a 9.3% increase year over year. You can see we're at pretty much some highs here still holding on. The single family average price per square foot is around $624 per square foot. That is a 11.2% year over year increase. And the single family month supply, 1.9 months of supply, that is still extremely low in a deep seller's market. That is a 32% decrease year over year. All right, and this slide demonstrates supply and demand. The blue line is the for sale and the gray line is the number closed. As you can see, the number of properties that has been made available for sale has gone down since the Great Recession, and consequently the price per square foot has skyrocketed and is really gone up essentially when we started compressing our supply well below 10,000 listings per month. Condo prices. Currently, number of active listings is around 2,569. That is a 26.8% decrease year over year. The number of pending sales is at 799. That is a 32.6% decrease year over year. And last but not least, the closed sales for condos is 1,211. That is a 4.1% increase year over year. The median sales price for a condo in LA County is $597,000. That is 11.6% increase year over year. And the average price per square foot for a condo is around $593 per square foot. That is a 13.6% increase year over year. In the condos month supply, the number of condos we have available for sale is 2.2 months. That is a 46.3% decline year over year, and that is, we're still in a stark seller's market territory, although it is not as favored as a single family house right now. For lease and for rent. So this is just a quick gander at the lease rental market. We're using apartments.com as our kind of gauge as the number of units that are available in the city of Los Angeles. This is not the county, this is just the city. It is exclusive of West Hollywood, Beverly Hills, Santa Monica, Culver City. Those are not included in the city of LA. The last month we had 25,510 on the market. This month we currently have 24,879. Not much of a difference, pretty flat. The product type that declined the most over the past year being available for lease or for rent has been townhomes. My hunch is that those have been being sold off and people are moving into them. So that's it. That's the numbers for LA County and the current update for the month of October. I love to hear your comments. If you just please leave those below, or if you want me to take a look at something specific for you, please reach out. We are here to help. There will be some new inventory from myself coming out here shortly, a couple new houses potentially, and definitely have a new place for lease available over in Culver City if you know anyone who's looking. I look forward to seeing you on the next market update.